Hey everyone, welcome back to Corporate Decoder, the place where we unpack the hidden stories within corporate filings. And today we are diving deep into Graphjet Technology's latest SEC filing. Prepare yourself, because this is going to be a wild ride as we see a company navigating some serious financial turbulence and trying to steer its future. So what is Graphjet Technology all about? Well, they are focused on a pretty cool niche artificial graphene and graphite made from palm kernel shells, a renewable waste product. Talk about sustainability, right? They believe their technology allows them to produce higher quality materials at a much lower cost than traditional methods. Now, this filing is an amendment to a registration statement, meaning they are updating information on shares they plan to offer and sell. This is primarily a resale of shares by existing security holders, not new shares being issued by the company to raise money directly. It is a bit of a mouthful, but essentially means people who already own shares want to sell them. The big story here is the sheer number of shares up for resale, over 17 million Class A ordinary shares. That is a substantial chunk of their outstanding shares, over 100% of their total shares outstanding as of January 2026. This gives us a signal that many early investors or stakeholders are looking to exit or diversify their holdings, and the company itself will not receive any proceeds from these sales. Let's talk about where you can actually buy these shares right now. Their shares trade on the OTC markets under the ticker GTIF. Interestingly, their shares were previously listed on the Nasdaq but got suspended and delisted in November 2025 due to not meeting continued listing requirements. This is a major red flag signaling significant challenges in maintaining compliance with major exchange standards. Now, every company has risks, but Graphjet lays out quite a few. They highlight a very limited operating history, which makes it hard to predict their future success. They also have a pretty eye-opening statement in their independent auditor's report about substantial doubt concerning their ability to continue as a going concern. Let's look at the numbers for the year ending the 30th of September 2024. They reported a net loss of over $16 million and had a working capital deficit of about $10 million. That is a tough spot to be in. The financial statements prepared by Crete and Chu CPA LLP even include an emphasis of matter regarding the correction of errors in their 2023 financial statements. This suggests past accounting had some significant issues. If we check their balance sheet as of the 30th of September 2024, their total assets were about $2.1 million, but their total liabilities were over $20 million. They have a shareholders deficit of over $18 million. This is a stark picture of a company with far more liabilities than assets. Looking at their operations for the year ended the 30th of September 2024, they had zero revenue and zero cost of revenue, so effectively no sales. Their operating expenses, however, were over $17 million. Keep in mind this is before factoring in about $375,000 in interest expenses. This led to a total loss before tax of over $17.8 million. For the year ended the 30th of September 2023, their loss was around $1.8 million. The jump in losses from 2023 to 2024 is massive. Now let's fast forward to the more recent unaudited financials for the 9 months ended the 30th of June 2025. They finally show some revenue of about $49,000, but their cost of revenue was even higher at $76,000, leading to a gross loss. What is really concerning is the share compensation expense of $19.2 million in this period. This is a huge non-cash expense likely related to issuing stock or warrants as compensation. Their total operating expenses for this 9-month period were over $22 million, resulting in a net loss of over $22.7 million. When we look at cash flows for the 9 months ended the 30th of June 2025, they used about $1.8 million in operating activities. This is better than the $2.5 million they used in the same period in 2024, but still shows they are burning through cash just to keep the lights on. Their financing activities provided about $1.5 million, which helped, but it was mostly from issuing shares, not from profitable operations. The company emphasizes its patented technology transforming palm kernel shells into graphene and graphite. They believe they are the sole producer capable of mass-scale production using biomass. According to the filing, their target market is growing rapidly, driven by electric vehicles and advanced manufacturing. They estimate the graphite market will reach over $36 billion by 2030 and the graphene market over $8 billion by 2031. They rely on palm kernel shells sourced in Malaysia, which they say is abundant and renewable. They initially had a supply agreement with Toyota for $30 million annually, but were unable to fulfill it in 2023 due to export controls from China. This highlights a key vulnerability in their supply chain and export strategy. Looking at leadership, Chris Lai-Thur-Wei is the Chief Executive Officer and Chief Financial Officer since April 2025. Before that, he was in corporate finance at investment banks. The board includes Tan Song Jae, Angchi Yongchen Seo Woon, and PWA Yi Guo. Many of them are described as independent directors, which is good for governance. The filing details a number of related party transactions. Aiden Lee Pingwei, a significant shareholder and former CEO, received warrants and loans. Tan Chin Tiong received shares for property purchases. These transactions are disclosed but add complexity and potential conflicts of interest. As of January 2026, Aiden Lee Pingwei is the largest shareholder, owning over 60% of the outstanding shares. This concentration of ownership is significant. Here we see a list of the individuals and entities planning to sell their shares. This range from Gomung Kiong to Tan Chin Tiong, and even International Liquidity LLC. The total number of shares they are looking to sell is part of that 17.7 million figure we saw earlier. The selling security holders will decide how and when to sell their shares. They can be sold at a fixed price of $0.71 until the shares are approved for listing on a national exchange or quoted on OTC markets. After that, they can be sold at prevailing market prices. This implies they are hoping for a listing or quote to boost their selling prospects. For investors, the tax implications are laid out regarding dividends and capital gains. It is pretty standard advice to consult your own tax advisor, which is always a good idea when dealing with investments. Graphjet Technology has authorized 1 billion Class A ordinary shares. As of January 2026, there were over 3.8 million Class A ordinary shares issued and outstanding. They also have warrants outstanding, with the company having assumed over 12 million Energem warrants. For fiscal year 2025, Chris Lai-Thur-Wei's total compensation was around $149,000. For the non-employee directors, the compensation was much lower, around $6,000 each. It seems Chris Lai will also be issued company shares equaling about 500,000 RM worth, which is about $106,000. The Remuneration Committee report is mainly a placeholder, noting they formed in connection with the business combination and haven't reviewed detailed compensation discussions yet. Under other expenses of issuance and distribution, it lists estimated fees for SEC registration, legal, and accounting expenses. These are typical costs associated with filings. The indemnification of directors and officers is standard practice, aiming to protect leadership. Finally, we have the signatures of the officers and directors confirming the accuracy of the filing. So, what is the story here? Graphjet Technology is in a very precarious financial situation with significant losses, a negative working capital, and doubts about its ability to continue as a going concern. The delisting from Nasdaq is a major blow to its credibility and access to capital. While they have a patented technology and a potentially growing market for graphene and graphite, their execution and financial management appear to be major weaknesses. The large number of shares being sold by existing holders is a sign that many might not see a bright future ahead, at least in the short term. The company's direction heavily relies on securing significant funding and successfully commercializing its product despite these immense challenges. It is a high-risk, high-reward scenario for any potential investor. Alright, that is our breakdown of Graphjet Technology's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching, see you next time.